So I still think we're going to see 34, maybe all the way up to 37 for silver over the next, this is a monthly chart. So over the next 1 to 2 months, I think we could actually see a very strong move. Percentage wise, from where we are kind of right now, that's potentially about an 18% move. So there's a lot of upside potential. The chart of silver is very strong. It had a rally up. It had a pause, a bull flag pattern, which is the halfway point. And then it's starting to run. And I think it could go up to these highs that we saw back in 2012. And
you're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, Chris Vermeulen is with us now. And as always, we're going to get an insight into where he sees these markets heading. Stocks have taken off since April, so probably let's start there, even though we'll get into gold and energy and all that good stuff. Chris, welcome back. So what is going on with the stock market here?
Yeah, well, thanks for having me back on the show, Kerry. Yeah, let's take a look at the charts. There is a lot going on. This is the SP 500. If we kind of zoom out so you guys can see the big picture, obviously we had the 2022 correction. 2023 was a big year. A lot of people have completely missed out on the rally from last November. They've missed out on this last one. Everybody was thinking the markets were going lower. People are still betting and trying to pick the top. Aggressive traders are scared to get in, or they're shorting this market, and it just keeps going higher and higher. There are definitely some divergences going on. I mean, when we look at the overall market, the NASDAQ is struggling. If we look at the QQQ, for example, there's been some big bouts of selling, especially about 4 or 5 sessions ago. We saw distribution selling in the tech. All the big Magnificent Sevens were down, and it pulled the market back. That's a day of distribution. And you and I actually talked about this probably like 6-8 months ago. I was saying, hey, once the SP 500 hits new all-time highs, I'm going to be looking for when we have these distribution days, and they should start to pick up more frequently. We had another distribution wave. We had another distribution wave here. So we're starting to see them more frequent, and there's nothing bad about them. It was just the market and big institutions lightening their portfolio, moving away from the big winners. But as it happens more and more, and we tend to see it happen with elevated volume, big volume spikes, that is telling us it is institutions lightening their portfolio, putting those shares into the hands of the average investor. And the fact that this equities market has been rallying really on technology stocks, most stocks and sectors are down. Small cap stocks have been beaten up. They haven't been doing very well just until really the last 4 or 5 sessions. They're starting to come to life. But when we look at this market, I believe we are in those late stages. The stock market, it goes in a rising tide, a falling tide, and we are back into a rising tide for the indexes. So we want to be long right now, but we want to stick with the trend until it actually reverses and the technicals break down. So as much as people want to be bearish right now, we are seeing the markets move higher, and people need to remain kind of long until proven otherwise.
All right. So it comes out, I'm always reminded when I see these types of rallies here where everyone's expecting it to go down and it goes up, or vice versa, stocks climb on a wall of worry, right?
Yeah. And a good visual of this actually, Kerry, is so I have a sentiment chart that allows us to kind of read what the average investor is doing. And whenever we get these orange phases in the market, especially big ones, the market naturally, these orange and red bars are when people are dumping their shares on the New York Stock Exchange. It's when they're buying put options, betting on falling prices. And it really only takes a little pullback for everyone to get spooked. And they all quickly get out of the market, and then the market goes higher without them. They bet on the downside, the market pushes higher. The more fear there is, the bigger the potential push. And we had some fear a couple of weeks ago, the market pushed higher. And right now, the market is scared again. They are betting and getting prepared for the market to have a big pullback. And this is actually a bullish sign. If people are dumping shares right now, yet it's holding up and grinding higher, we're probably going to see another big push up in the equities market. And it's really interesting. The sentiment, the majority of the masses are typically wrong, betting, trying to really go against the market right at the worst possible time, just before they're probably going to go even higher. Of course, they're dumping their shares and getting out, and they get caught on the wrong side.
Yeah, well, that always happens, right? So how much longer can it go on for? They always say the market can remain irrational longer than you can remain solvent, right?
Yeah, for sure.
So, hey, all right. So let's talk about my favorite, gold here. What's up with gold?
I love gold. Still a very, very bullish sign for gold. It's had a series of rallies and pauses, and it's starting to break out here to some new all-time highs. This chart is pointing to 2650, 2750 for gold. Once that level is reached, I will be a little bit more bearish and hesitant on the market. I believe we're seeing this final push up just before the equities market puts in a major top. And the monthly chart of gold gives us a very good view of where I kind of believe we are. When we look at this chart, we started a new super cycle for gold in 2019. It's gone into a multi-year consolidation, a pause, and now we're starting to see this big run up. And I think that's because people around the world are getting nervous. They feel like the recession's coming, the stock market's frothy. Those who are savvy are moving into these defensive, protective assets. If we go back in time, we saw the stock market break into a new super cycle back in 2003. We had a multi-year consolidation. And then we saw a run to safety just before the 2008 financial crash. And that's where we are right now. We're seeing that run to safety. And then I think we're going to see the equities markets, the recession, all have a big correction. And gold will most likely pull back with it. But we are in this phase right here where gold, I think, is still going to continue to extend up to 2650, 2700. Which, is still a pretty decent push from where it is. It's still another 10% higher for gold before I think it starts to top out. So when gold hits that level, people should be aware. I think there's more downside potential short term. But once the markets have this cleansing event like 2008, we go into a 2025 market correction. After that is when I think we're going to really see a multi-year run in gold and silver and miners. It's going to be the ultimate opportunity that really happens like once every decade or so. And it's going to be pretty exciting. So I like gold. It is one of my favorites. And obviously silver. Silver is just more volatile.
Okay. So yeah, let's talk about silver for a little bit. Silver really showing some strength. It hit a low, I guess, back towards the end of last year of around $17, and it's been straight up. Well, not straight up. It's a sawtooth pattern. How much higher can it go? Can we see it eclipse its all-time high? Because gold is trading at nominal highs, but silver is trading at 60% of its all-time high.
Yeah. So I still think we're going to see 34, maybe all the way up to 37 for silver over the next, this is a monthly chart. So over the next 1 to 2 months, I think we could actually see a very strong move percentage wise from where we are kind of right now. That's potentially about an 18% move. So there's a lot of upside potential. The chart of silver is very strong. It had a rally up. It had a pause, a bull flag pattern, which is the halfway point. And then it's starting to run. And I think it could go up to these highs that we saw back in 2012. And that is going to act as some resistance on the chart. Now, silver is doing very much same as gold. It broke into a new super cycle. It had a multi-year consolidation, and then everybody piled into silver just before the economy went into the crapper. Mm-hmm. And we're doing the same thing now. It started a major super cycle and broke out. It's had a multi-year pullback and consolidation, and now we're starting to see that run to safety. I do think silver will probably pull back to where it is now or lower during a reset, but that will be one of the last dips before it goes higher, just like over here. And then I think silver goes ballistic. I think we blow past 50. I think we go up into the 80s or higher for silver.
Really?
Not right now, but I mean, starting post probably 2025. I think we'll see a huge move. I think silver will become a major dominant player. So I like silver from that regard too. They have a very similar thing. Look, check this out. I just got this the other day. Nice. That was an ounce bar of silver from a friend who.
How big is that?
It's 1,000 ounce. Well, it's actually 980 something like that.
Just don't drop it on your foot.
No, yeah, I just got over the cast off my foot. I did break my foot about 7 weeks ago.
So you didn't dropping a bar on your foot, right?
I didn't drop the bar on my foot. I stepped on a ball, rolled my ankle, and coaching my son's baseball team, and snapped a bone. But anyway, I like silver. I just bought more silver, and I think long term these are solid assets. Pardon the pun.
Everyone takes a fall.
Yeah,
you're right. That's my feeling about it. And, hey, and markets are the same way. But to think $80, then really, once it hits 80, there's no limit that we can predict, can we?
Yeah, I think once it blows past $50, I think it just goes into it's in no man's land. There's no kind of resistance. I think it could just blow off and keep shooting. Who knows how high it will go, right? So I think gold will do something similar. Silver is definitely, percentage-wise, will definitely catch people's attention. It'll be screaming. It'll be a rocket.
Wow, man, that's like 2.5 times where it's at now, more than that. It's a 250% return. And when it happens, it's going to happen really quick, isn't it?
It is. It's if you don't catch it, if you're going on holidays for 2 months or something, you're going to come back and be like, how did I miss 100% return?
The question is, what will the currency unit that it's valued in be worth once it catches up? Is it going to outpace the inflation rate, give you a positive return adjusted for inflation?
I don't know. I don't know what the currencies are going to do. I think the U.S. dollar, I think after we have a financial reset, the U.S. dollar is definitely going to hit the back burner. I think it's time as the reserve currency is going to really start to fade. People have been talking about it forever, but I feel like we actually have the technologies and the whole world is open to, these new blockchain platforms, or not platforms, but I don't know, protocols or whatever it is, so that it can be more open source, free flowing. The world regulates things versus regulators trying to regulate and control things, right? So we're definitely getting closer to the world becomes one, and we all regulate each other and assets and things like that.
Amazing. All right, what else you got for me here? So we got a energy chart.
Yep. Let me pull up the chart of oil. We can take a look at that. If we take a look at crude oil, it's having a little pullback. Overall, I'm not a huge fan of the crude oil price. It's really trading in this kind of
trendless, huh?
Yeah, it's in its pennant formation. It had a big move down. The big question is this the halfway point? I do believe we're going to go into a recession. I think we're going to see $40 oil. Again, this is the monthly chart. So looking forward, 6, 7, 8 months, this could be $40 oil from now. We'll see how that unfolds. That's what this chart pattern is pointing to. So what's interesting is energy stocks are actually trading up near all-time highs. If we look at, for example, XLE, it is trading way up here at all-time highs, and which I find pretty interesting. And
is that a result of the high yields on those stocks?
Yeah, it could be. It could be. Typically, we see the energy sector do fairly well just before recession. I think a lot of people are expecting oil to go higher, and they're piling into the leverage play, which are the miners or the energy stocks, and they're going up. I mean, when we have a correction, these are going to get hit just like they did back in 2008. And every time we have a kind of economic weakness, they fall off a cliff. But people are in the space. There are good dividends, and the whole fact that we have kind of the war going on, it definitely helps. I think people want to move into energy space, expecting potentially higher oil pricing. Usually oil does very well in the middle of a war, although, the war now seems more digital than fuel consumption.
More of a media event, it seems, than anything else. Yeah. Everybody, propaganda, everybody competing to get the right spin, the right propaganda out. It's kind of like wag the dog,
Yeah. So, like, Kerry, if we take a look at the U.S. dollar index, so this is kind of where I kind of think we might unfold. So this is the monthly chart of the U.S. dollar index. I believe we've got a series of higher lows, a series of higher highs. So the dollar is in a long-term uptrend. I do believe we're going to see in the next few months the stock market, the economy top out. I do believe we're going to see the U.S. dollar start to rally, where maybe up to 120, maybe even higher. And as the stock market's collapsing and the dollar's going up as kind of the last hoorah, I think, for the last maybe reserve currency move for it, that is going to put pressure on gold. That's when we start to see gold and silver have the pullback because of the rising dollar and just liquidation of people having to liquidate investments because everything's falling. They have margin calls. They're running out of money. They're selling in fear of losing even more money. So the dollar, I think, is going to have one more big push. And then this is kind of taps into what you and I were just talking about, Kerry, which is I think after this market correction and chaos will be the reason for the government to say, hey, we're resetting to some new digital currency. And it'll be similar like the 2000. Actually, a lot of the feeling that I have now feels very similar to the 2000 in terms of major multi-year decline in equities. I think the dollar will go into a multi-year sell-off. So even when it gets up here, I think it's going down, and it might not ever come back, which is the ultimate story for precious metals, right? And that's where we flip to some digital currency and bricks or whatever those new platforms are going to be. So it is going to be life-changing. Really, the next, I think, 2 or 3 years, the financial system changes. The borders of who controls what change. It's not just going to be like a little company in the United States, like the SEC and the COMEX and stuff. There's going to be open platforms where physical gold is, exchanged fairly with what's deliverable between people. There's a lot of stuff coming together. So it's if you don't learn about it and don't take action, I mean, you're going to get left behind. I think
you're going to get hit for sure. Anything else you want to look at here?
I really think that's about it. I think in a nutshell, if we look at the overall cycle in the markets and investments in general, I believe we're right up here at maximum peak risk when it comes to real estate, when it comes to businesses, when it comes to equity, stocks. I think, any money you put in here has very, very little upside. I think it's all downside from here. So people just need to be aware. We're going to go through a huge reset, and it's going to reset how I think the world works. So I think that's what people need to understand is you don't want to just be sitting here thinking the markets are going up, AI is saving the day. You better be ready, because if you don't, you're going to be half the wealth you had potentially a year and a half from now and scratching your head going, what did I just do? I wasted 40 years of hard work. It's gone.
Yeah. Well, that's what inflation does. It undermines all the values. It really denigrates saving and elevates spending, because you're spending just to basically just to beat the inflationary wave. What's your take on inflation, though? Let's put the reset aside. Has inflation been solved like the Fed would like you to believe, even though, it's at 2% or whatever, right?
Yeah, well, I don't believe in any of whatever any of those guys say, but I mean, inflation's still really high. It seems like it's still actually creeping up to some regard. I mean, I don't follow politics, but I did see that if Trump gets in, he wants to put like a 60% tariff on China stuff, everything from China, which to me, because everything here comes from China, it seems. Yeah. If he does that, I think inflation is going to go through the roof, because I used to be an importing company. I used to bring in things from China. I used to have my own healthcare product lineup. And I'll tell you, if I had a 60% premium, I have to tack it onto the product and push it off to, the buyers. So if that happens, we're going to see inflation skyrocket, because unfortunately, it doesn't matter what you flip over, it says made in China on it. That could be a huge game changer. That could totally screw us with inflation. It'll obviously bring factories and things back, potentially back to North America, and we build our own economy. I'm not saying it's a bad thing. It's just saying we might see inflation. But if that doesn't happen, I do feel like inflation, once we go into this kind of reset, I do think it will reset and inflation will go down. People eventually are going to have to take a hit. Instead of selling their container load of product at the high price and try and pass it on to the user, they're going to be like, well, we just got to sell this stuff for a loss and empty our warehousing. They're going to have to take the hit, and then eventually it'll go down. So somebody's going to have to take the hit for getting rid of their high cost inventory at some point here. And then I think prices will start to drift lower. And that, I don't think that'll even happen. You know, we don't need a recession for that to happen. I already think things are stalling. They're already saying we've had peak sales for the SP 500. Sales forecasts are all coming down for a lot of businesses. They're downgrading. So definitely things are slowing, and eventually that'll hit the end buyer, the seller, who's going to have to lower their price and eventually just be happy with, if we can get our cost out of this, we'll be happy. Or a tiny loss, let's just get rid of this inventory because it's it's a heavy weight on them.
Yeah. I get it. Well, all right. So we got all that from you. We appreciate it. Just tell us where we find you, how we connect with you, and subscribe.
Yeah, sure. You can get my video analysis on my YouTube. Just go to The Technical Traders on YouTube, or they can go to thetechnicaltraders.com, and they can join my free newsletter. I provide video analysis and updates every week on what's going on, how to take action with the weekly swings in the markets, and what's going on with the Magnificent Seven and precious metals and all of that stuff.
All right, cool. Appreciate it. Hey, if you've got a question for Chris or myself, shoot me an email, kl@kerrylutz.com. Link in the show notes on financialsurvivalnetwork.com. We'll take you right to Chris's site. While you're there, please sign up for your free newsletter. Chris, always a pleasure. Thanks for stopping by. We'll touch base with you in a couple months, see how things are progressing or regressing.
All right. Thanks, Kerry. Take care. Bye-bye.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.